Assalamualaikum warahmatullahi wabarakatuh. So for the first part, I will present about the process of choosing the company, which is Maxis&Celcomdigi. Firstly, we make an initial group discussion. We held a group meeting to brainstorm potential companies to analyze. Each member suggested a few well-known companies from various industries in Malaysia. Secondly, we narrowed down to the telecommunication industry. We agreed to focus on the telecommunication industry because it is fast evolving and has a significant impact on Malaysian consumers and businesses. Next, we're listing major telecommunication companies. We listed top companies in Malaysia such as Maxis, Celcomdigi, U-Mobile and Telekom Malaysia. Then, we shortlisting Maxis and Celcomdigi. We found that Maxis and Celcomdigi are two of the largest and most competitive players in the industry. And then, we made final decision and justification. We finalized Maxis and Celcomdigi because they are direct competitors. So, their strategic approaches are different, allowing for a comparative analysis. Lastly, we make a task distribution. After selecting the companies, we divided roles among group of members to research the company background, the ratios that we want to use, the horizontal analysis, vertical analysis for each company, and also the conclusion. Okay, so now I will present the current ratio of Maxis from 2020 to 2024, which shows the company's ability to pay short-term liabilities. Based on the horizontal analysis, we can see the changes year by year. From 2020 to 2021, the ratio dropped from 0.63 to 0.48, showing a decrease in liquidity due to a rise in current liabilities. Then in 2021 to 2022, the ratio improved back to 0.63, meaning liquidity recovered as current liabilities decreased. However, from 2022 to 2023, it dropped again to 0.56, and in 2024 it fell further to 0.52. This consistent decline shows weaker short-term liquidity. Overall, the ratio was strongest in 2022 and weakest in 2021, but the downward trend in recent years could be a concern for Maxis' ability to cover short-term obligations. Next, for the net working capital of Maxis from 2020 to 2024. Based on the horizontal analysis, we can see the changes year by year. In 2020 to 2021, net working capital worsened from negative 1,639 million to negative 3,271 million due to a sharp rise in current liabilities. Then in 2021 to 2022, it improved to negative 1,662 million, showing better liquidity as liabilities decreased. However, from 2022 to 2023, it dropped again to negative 2,381 million, and in 2024, it fell further to negative 2,697 million. This shows a consistent negative trend, meaning Maxis continues to face short-term financial pressure and may struggle to cover its immediate debts. And now we move to the current ratio of Celcomdigi from 2020 to 2024. From 2020 to 2021, the ratio increased slightly from 1.08 to 1.09, showing a small improvement in short-term liquidity. In 2021 to 2022, it rose sharply to 1.77, reflecting a strong increase in current assets and better ability to pay short-term debts. Then, from 2022 to 2023, the ratio improved again to 1.82, supported by a slight drop in current liabilities. Finally, in 2023 to 2024, the ratio stayed at 1.82, showing that Celcomdigi maintained a strong and stable liquidity position throughout the year. So now for the net working capital of Celcomdigi from 2020 to 2024. From 2020 to 2021, net working capital increased slightly from 605.86 million to 632.81 million, showing a stable financial position. In 2021 to 2022, net working capital rose sharply to 16.31 billion, driven by a major increase in current assets, showing strong improvement in liquidity. From 2022 to 2023, it increased slightly again to 16.46 billion, maintaining solid short-term financial strength. In 2023 to 2024, net working capital dropped slightly to 16.19 billion, which still reflects a very strong liquidity position, though with a small decline. Overall, Celcomdigi maintained excellent short-term financial health across the years.
Now, I will present the next ratio, which is the leverage ratio of Maxis from 2020 to 2024. The debt ratio is calculated by dividing total debt by total assets, then multiplying by 100. Based on horizontal analysis, we can see how the debt ratio changed from year to year. In 2020, the debt ratio was 67.86%. It increased slightly in 2021 to 70.04%, showing that Maxis used more debt to finance its assets. In 2022, the ratio rose again to 72.35% and continued to rise to 74.79% in 2023, which was the highest in 5 years. However, in 2024, the ratio slightly dropped to 73.54%, showing a small improvement. Overall, from this horizontal analysis, we can say that Maxis had the lowest debt ratio in 2020 and the highest in 2023. From a financial perspective, a lower debt ratio is better because it means the company is less dependent on debt. The next leverage ratio for Maxis is the debt to equity ratio from 2020 to 2024. This ratio is calculated by dividing long-term debt by total assets, then multiplying by 100. This ratio shows how much long-term debt the company used compared to its equity. Based on horizontal analysis, we can see the change year by year. In 2020, the ratio was 147.82% and it decreased in 2021 to 140.43%, which means lower debt risk. But in 2022, the ratio increased sharply to 191.98% and it reached the highest level in 2023 at 202.21%, showing higher risk. In 2024, the ratio dropped slightly to 183.14, which is still high but better than 2023. So, from this analysis, we can say that Maxis had the highest risk in 2023 and lowest in 2021. A lower debt to equity ratio is considered better because it means the company relies less on debt. Next, we look at leverage ratio for CellcomDigi. The first one is the debt ratio from 2020 to 2024. The debt ratio is calculated by dividing total debt by total assets, then multiplying by 100. From the horizontal analysis, we can observe the following trend. In 2020, the debt ratio was 92.6%, showing high reliance on debt. In 2021, it dropped slightly to 91.93%, but still remained high. In 2022, the ratio decreased sharply to 56.54%, indicating a big improvement in reducing debt. It continued to drop in 2023 to 54.82%, the lowest in the 5-year period. In 2024, the ratio increased slightly to 55.04%, showing a small rise in debt usage. So, from this horizontal analysis, we can say that CellcomDigi had the highest debt risk in 2020 and the lowest in 2023. The second leverage ratios for CellcomDigi is debt to equity ratios (DER). This ratio is calculated by dividing long-term debt by total equity, then multiplying by 100. Based on horizontal analysis, we can observe change over the years. In 2020, the ratio was very high at 836.29%, showing heavy reliance on debt. It decreased in 2021 to 675.55%, but still indicated high risk. In 2022, the ratio dropped sharply to 78.87%, showing major improvement. It continued to decline in 2023 to 76.23%, the lowest point. In 2024, it slightly increased to 79.2%, but still remained at a healthy level. From this analysis, we can conclude that CellcomDigi had the highest financial risk in 2020 and the lowest in 2023. A lower debt to equity ratio is generally preferred as it suggests the company is less dependent on debt and financially more stable.
Now, let's look at the efficiency ratio, especially the total asset turnover ratio or T2 for Maxis. Based on horizontal analysis, we can see the change year by year. From 2020 to 2021, Maxis T2 remained the same at 0.41 times, showing no change in its efficiency in using assets to generate sales. In 2022, the ratio slightly increased to 0.42 times, indicating a minor improvement in asset utilization. In 2023, the T2 rose further to 0.45 times, reflecting better efficiency and generating revenue from its assets. This positive trend continued in 2024 with the ratio increasing to 0.47 times, although the pace of growth slightly slow. In summary, while Maxis maintained stable efficiency from 2020 to 2021, it showed gradual and consistent improvement from 2022 to 2024. Next, for the fixed asset turnover ratio of F2 for Maxis, based on the horizontal analysis, we can observe the year-by-year change. From 2020 to 2021, Maxis F2 decreased slightly from 1.83 times to 1.78 times, indicating a small drop in how efficiently it used fixed assets to generate sales. In 2022, the ratio declined further to 1.74 times, showing a continued but moderate decrease in efficiency. However, in 2023, Maxis recovered with the F2 rising to 1.90 times, reflecting improved utilization of its fixed assets. This positive trend continued into 2024 with the ratio increased again to 2.07 times, marking the highest level over the 5-year period. In conclusion, although Maxis experienced a decline in fixed asset efficiency in 2021 and 2022, it demonstrated a strong recovery and notable improvement in the following 2 years. Now, I will review the efficiency ratio for CellcomDigi, focusing on the total asset turnover ratio of the two. Based on horizontal analysis, we can see the change year by year. From 2020 to 2021, the T2 increased from 0.75 times to 0.81 times, indicating an improvement in CellcomDigi's efficiency in using its assets to generate sales. In 2022, the T2 dropped sharply to 0.42 2021, 8 times showing a significant decline in efficiency, possibly due to structural change or operational challenge. In 2023, the ratio improved to 0.35 times, suggesting a recovery as the company started to utilize its assets more effectively. By 2024, the data remained steady at 0.35 times, showing stable efficiency, although still below the levels before 2022. In summary, despite a major drop in 2022, CellComdigi has made steady progress in regaining its asset efficiency over the following years. Next, for the fixed asset turnover ratio operator for CellComdigi, based on horizontal analysis, we can see the change year by year. From 2020 to 2021, the factor increased from 2.13 times to 2.21 times, reflecting a modest improvement in how efficiently CellComdigi used its fixed asset to generate revenue. However, in 2022, the ratio dropped sharply in 1.06 times, indicating a significant decline in efficiency, possibly due to a rise in fixed assets or lower revenue. In 2023, the factor improved to 2.07 times, showing a strong recovery and bringing the efficiency level close to that of 2021. By 2024, the ratio slightly decreased to 1.93 times, suggesting a small drop, but overall, the company maintained a strong level of efficiency. In summary, although the CellComdigi experienced a sharp dip in 2022, it recovered quickly and sustained good asset efficiency through 2024.
Next, I will present the return on asset ROA for Maxis&Celcomdigi from 2020 to 2024. For Maxis, the ROA shows how efficiently the company using their asset to generate profit. From the horizontal analysis, we can observe the trend over 5 years. In 2020, the ROA was 6.3%, but it dropped slightly to 5.83% in 2021, cause of inefficient utilization in their asset. Then, in 2022, ROA decreased sharply to 5.12%, remaining inefficiently and reached the lowest point in 2023 at 5.35%. However, in 2024, there was a big recovery, rising to 183.40, show the strong inefficiency in generating income by using their asset. So, based on this trend, we can say that Maxis had the higher profit in 2024 and the lowest in 2023. Despite a decline, Maxis finally shows strong recovery and steady improvement in 2024. For Maxis, the return on equity ROE from 2020 to 2024 measures how well the company generated profit using shareholder equity. Based on the horizontal analysis, we can observe the trend over 5 years. In 2020, the ROE was 19.60%, but it dropped to 19.45% in 2021, cause of minor decline on return earned. Then, in 2022, ROE dropped slightly to 18.55%, still remaining lowest and reached the lowest point in 2023 at 17.27%. However, in 2024, there was a big recovery, rising to 23.64%, show big improvement in the rate on return earned on the common stock of shareholders. So, based on this trend, we can say that Maxis has the highest return earned in 2024 and the lowest in 2023. Despite a small drop in 2020 to 2023, Maxis finally shows strong recovery and big improvement in 2024. Next, I will present the return on asset ROA from CellComdigi from 2020 to 2024. For CellComdigi, the ROA shows how efficiently the company using their asset to generate profit. From the horizontal analysis, we can observe the trend over 5 years. In 2020, the ROA was 14.91%, but it dropped slightly to 14.82% in 2021, caused by inefficient in utilization their asset. Then, in 2022, ROA decreased sharply to 2.03%, showing higher risk in profitability, and have minor improvement in 2023, recovered to 4.3%. However, in 2024, there was slightly decreased to 3.6%. It's a small drop, but inefficiently in utilizing their asset compared to 2023. So, based on this trend, we can say that CellComdigi has the higher profit in 2022 and the lowest in 2022. So, based on this trend, we can say that CellComdigi had the higher profit in 2020 and the lowest in 2022. Despite a major drop in 2022, CellComdigi finally shows strong recovery in 2023. For CellComdigi, the return on equity ROE from 2020 to 2024 measures how well the company generates profit using shareholder equity. Based on the horizontal analysis, we can observe the trend over 5 years. In 2020, the ROE was 201.48%, high on profitable, but it dropped to 183.64% in 2021, cause of minor decline on return earned. Then, in 2022, ROA dropped slightly to 4.68%, the lowest in the 5-year period, and in 2023 have a big improvement in the rate of return earned for shareholder with 0.52%. However, in 2024, they have a drop to 8.59%, show small decline but lower return earned compared to 2023. So, based on this trend, we can say that CellComdigi had the highest return earned in 2020 and the lowest in 2022. Despite a major drop in 2022, Celcomdigi finally shows strong recovery and big improvement in 2023.
Now let's move to the vertical analysis for current ratio. Now let's compare the current ratios of Maxis and Celcomdigi. In 2020, Celcomdigi had a ratio of 1.08, much better than Maxis at 0.63, showing stronger liquidity. In 2021, Celcomdigi remained strong at 1.09, while Maxis dropped to 0.48, widening the gap. In 2022, Celcomdigi's ratio rose sharply to 1.77, while Maxis recovered slightly to 0.63. Celcomdigi clearly outperformed. In 2023, Celcomdigi continued its strength at 1.82, while Maxis dropped again to 0.56. Finally, in 2024, Celcomdigi maintained its high ratio at 1.82, while Maxis stayed low at 0.52. Overall, Celcomdigi consistently showed stronger short-term liquidity compared to Maxis throughout all the 5 years. Okay, now for the net working capital, the comparison between Maxis and Celcomdigi. In 2020, Celcomdigi had a positive net working capital of about 606 million, while Maxis showed a deficit of negative 1.64 billion. In 2021, Celcomdigi remained stable at 633 million, but Maxis deficit worsened to negative 3.27 billion. In 2022, Celcomdigi's net working capital jumped significantly to 16.31 billion, showing strong liquidity, while Maxis still had negative net working capital of negative 1.66 billion. In 2023, Celcomdigi increased slightly to 16.46 billion, maintaining strong performance. Maxis, however, remained in deficit at negative 2.38 billion. In 2021, Celcomdigi held a solid net working capital of 16.19 billion, while Maxis continued to show negative net working capital at negative 2.70 billion. Overall, Celcomdigi consistently showed strong and growing liquidity, while Maxis struggled with negative working capital across all the 5 years.
Now I will present vertical analysis for debt ratio. From 2020 to 2024, we compare the debt ratios of Maxis and Celcomdigi to assess financial risk. In 2020, Maxis had a debt ratio of 67.86%, while Celcomdigi's was higher at 92.6%. The same trend continued in 2021 with Maxis at 70.04% and Celcomdigi at 91.93%. This shows that Maxis was financially stronger. However, from 2022 to 2024, Celcomdigi's debt ratio dropped to around 55%, while Maxis increased to over 72% each year. This means Celcomdigi became more stable and less dependent on debt. Overall, the company with the lower debt ratio each year is considered more financially secure and less exposed to debt-related risk. Next is about vertical analysis for the debt to equity ratio (DER) from 2020 to 2024 for Maxis and Celcomdigi. In 2020 and 2021, Celcomdigi had a significantly higher debt to equity ratio compared to Maxis. For example, in 2020, Celcomdigi's ratio was 836.29%, while Maxis was only 147.82%. This shows that Celcomdigi was highly leveraged and carried more risk during these years. However, starting from 2022 onwards, the trend changed. Maxis began carrying more debt relative to equity compared to Celcomdigi. For instance, in 2020, Maxis had a ratio of 191.98%, while Celcomdigi's was only 78.87%. The same pattern continued in 2023 and 2024, where Maxis maintained a higher DER. This shift indicates that from 2022 to 2024, Celcomdigi improved its capital structure, reducing reliance on debt, whereas Maxis increased its financial risk by depending more on borrowed funds. In conclusion, while Celcomdigi was in a weaker position during the earlier years, it has become financially healthier over time. On the other hand, Maxis has shown an increasing reliance on debt in recent years.
Now let's examine the total asset turnover through vertical analysis for Celcomdigi and Maxis from 2020-2024. In 2020, Maxis had a lower debt to at 0.41 times compared to Celcomdigi's 0.75 times, indicating better asset utilization by Celcomdigi. In 2021, Celcomdigi improved further to 0.81 times, again outperforming Maxis, which remained at 0.41 times. However, in 2022, Maxis recorded a higher debt of 0.42 times, while Celcomdigi dropped sharply to 0.18 times, showing a significant decline in efficiency. In 2023, Maxis continued to lead with 0.45 times, while Celcomdigi recovered slightly to 0.35 times. By 2024, Maxis maintained its lead at 0.47 times, while Celcomdigi remains unchanged at 0.35 times. In summary, Celcomdigi lead early on, but Maxis shows stronger and more consistent asset utilization from 2022 onwards. Next, we will look at the fixed asset turnover through vertical analysis comparing CellComdigi and Maxis from 2020 to 2024. In 2020 and 2021, CellComdigi showed stronger efficiency with better values of 2.13 times and 2.21 times respectively compared to Maxis, 1.83 times and 1.78 times. However, in 2022, Maxis overtook CellComdigi with a factor of 1.74 times, while CellComdigi's efficiency dropped significantly to 1.06 times. CellComdigi bounced back in 2023 with 2.07 times, slightly surpassing Maxis and 1.90 times. By 2024, Maxis regained the lead with a factor of 2.07 times, while CellComdigi remained close behind at 1.93 times. In summary, although both companies experienced ups and downs, Maxis ended the period with the strongest fixed asset efficiency overall.
For the vertical analysis for return on asset, we can observe the trend over 5 years between CellComdigi and Maxis. In 2020, CellComdigi ensure better asset utilization with 40.91% compared to Maxis 6.3%. In 2021, CellComdigi maintained the lead with 14.82% compared to Maxis 5.83%. In 2022, Maxis overtook CellComdigi with 5.12% compared to 2.03%. In 2023, Maxis slightly ahead with 4.35% compared to CellComdigi 4.30%. In 2024, Maxis regained the lead with 6.25% compared to CellComdigi 3.86%. Based on this analysis, CellComdigi led earlier but Maxis ended the period with stronger return on asset overall. From the vertical analysis for return on asset, we can observe the trend over 5 years between CellComdigi and Maxis. In 2020, CellComdigi led in return and with 201.48% compared to Maxis 19.60%. In 2021, CellComdigi maintained the lead with 183.64% compared to Maxis 19.45%. In 2022, Maxis overtook CellComdigi with 18.54% compared to 4.68%. In 2023, Maxis slightly ahead with 17.27% compared to CellComdigi 9.52%. In 2024, Maxis regained the lead with 23.64% compared to the CellComdigi 8.59%. Based on this analysis, CellComdigi led earlier but Maxis ended the period with stronger return on equity overall.